Let's get a sort of a global look, a top-down perspective on how we're set up for this trading session here in the Asian region. And for that, Peter McGuire is joining us from XM. Peter, welcome to the program. You know, U.S. equities, bond yields, little changed for much of the overnight session, but we did see some falling, some selling, I should say, to the close. I guess that exuberance over a potential vaccine just isn't enough, to keep the buyers coming.
Well, good morning, Nadine. Yes, I would say so. And also you had 3 days of very solid moves to the upside and probably a little bit of profit taking. So it came out exhausted to the upside, take that oxygen out of the market and a little bit of a correction to the downside. It wasn't really a huge washout. And I feel as though that momentum will probably roll across most of Asia today. And it'll be interesting to see by 4 o'clock what the winners and losers are across Asia.
As always, Peter, just a quick one, commodities. I know you pay a lot of attention to commodities. Boy, they've been on fire. And last night was no exception, particularly when it comes to the oil complex. I mean, Brent did come off, but U.S. oil was up close to 2%. It appears as if there might be some room, I guess, freeing up at Cushing.
Well, that's right. And it's up nearly 50% in about 7 or 8, probably about 6 or 7 days of trading. So not a bad market, any market that moves up 50%. And it didn't wash out as far as that expiry date. So that was the end of the futures contract. So that was I think a sigh of relief compared to what happened last month. And then, as you mentioned, as far as capacity and all of those frameworks, we understand what's happening as far as oil production in the States, Nadine. You're looking at a shutdown across most of that shale sector, and they can't be profitable at these sort of numbers. So in turn, you keep it in the ground. It's not as though it's growing on a tree, and it's been there for millions of years, and it can be there for a couple more if need be. So that's the beauty of the oil market.
Well, one thing that does continue to come out of the ground is gold. People continue to dig it up. It's trading at near record levels, at least in recent times. Do you see this trend continuing?
Well, it's certainly in record, Daniel, when you're looking at it as far as that the Aussie dollar, and then you're looking across a number of those others, British pound and what impact it's having there. So yes, now upside, that's interesting because that US dollar is off from 100.5 to around about 99.5. That's the US dollar index in the last 48 hours. So it's been a little bit softer. And then you're looking at gold prices consolidating at that 1735 to 1745 sort of number. We tested 1760 on Monday, pulled back. It had a strong rise Friday, and then it's just, I think, gaining a little bit more momentum. And as you know, markets just don't go up and they don't go down. They go sideways for a little bit of time and then they, find themselves. And I think it's onward and upward from here, Daniel.
And does the same apply when you look at a commodity like silver? We talked a bit about that with a few guests comparing gold to silver, the ratios they trade, the different factors that drive those prices. Do you think silver will be in the upward trajectory?
Well, it's had a lovely rise in the last matter of, a couple of weeks, and it's, up from that 15 to 17. So it's nothing short of, quite a very strong rally to the upside. So that needs to probably, I don't think it's run out of steam. It's got plenty of upside left, and that industrial demand I think will probably pick up over the next 6 to 12 months. There'll be some form of demand picture there for silver, and while it's getting swept up with Big Brother, it'll also get a little bit of a wind behind its sails if we see a little bit more industrial demand. PMIs come back, and it just depends on how quick we come out of the corona pandemic on a global front, and once we see some sunshine there, Daniel, which hopefully isn't too far away, that's, I think, going to add a little bit of horsepower to that market as well.
Peter, we're seeing, I guess, some stabilization in the economic data that's coming out here in Australia. We are looking forward to getting that preliminary retail sales read at 11:30. The data out of the UK has been particularly poor. After, last week's GDP read, we had some pretty dismal jobs figures released through the overnight. We get UK inflation figures out tonight, with the market expecting, the pressure to remain very sluggish at about 0.1% in April. And then we've got Brexit looming large still. You've got to think that the pound is going to remain under pressure.
I think definitely, Nadine. And not only that, it's in agony territory. So when you're thinking about that pound, I think there's only one-way traffic for it. It's getting hit on a number of sides. As you just mentioned, as far as the uncertainty with Brexit, that just seems to be a deal to nowhere. There's nothing on the table. And unless that it seems to be compromises all round, and this might be a time for a little bit of sympathy from the Euro sector to Brexit, but we'll have to just wait and see how good Boris's negotiations are. And then you're looking at the PMI numbers, you look at retail sales, all of that rolled into it, and the services print is at 25. That's up from a crated, 13 last month. So whilst we've seen a little bit of a bit more positiveness, we're still a long way from any form of recovery, and I think it's going to be a bit of doom and gloom still for that pound.
I think that's right, Peter, and we did see that pound go all the way to 63 against the Aussie at the time. It's 53 now, right now. We'll have to leave it there, but thanks as always for taking us through the markets.
Thank you, Daniel. All the best. Cheers, Nadine.
See you, Peter.